All right, guys, welcome to our live broadcast. It's kind of odd. It's a Tuesday. We did our Tuesday night podcast for 4 years, so it is a Tuesday podcast. But we just wanted to come on and bring you guys some market updates, some housing market updates since, I don't know, the spring market has been a complete bust. So we're going to dive in. We're going to tell you what is happening, what you should be able to expect. But I have to bring in my good friend in Chicago, John Hoffman. How are you?
How you doing, Todd? Good to see you, man.
It's always good to see you, my friend.
Happy summer.
Happy summer.
Almost.
Right before we went live, John said, Todd, why are you wearing a long sleeve shirt? And it's because it's like 65 degrees here in Maryland and rainy. And of course, tomorrow will be probably 95 and hot and humid. But yeah, that's what we get here. But we were just talking, John, you had me laughing so hard. We were talking about, well, just kind of tell everybody what we were discussing before we went live. How's your spring market, John?
Well, there is no spring market. It's a market. We don't know what that is, but like I was saying before we went on, it's you can't tell May from December, other than the decorations. There's really nothing to tell because there's no difference in the market. I really haven't seen any uptick. If anything, it was a downtick in May, So yeah, I don't. And then the deals we're putting together right now are incredible. The lenders are magicians. People with 5% down buying homes that need $80,000 in work. Windows are broken. Shingles are in the yard. I mean, and we just closed one a couple weeks ago like that. And you're literally walking on a closing like, okay, thanks. Waiting for them to pull you over and take the money back, But yeah, it's just insane right now, and it's going to get worse. I'm here to tell you, it's going to get worse. It's coming up, man.
Well, one of the things that I want to do after we talk to you is I'm going to pull up our housing market around our mid-Atlantic area, and it's amazing how many pre-foreclosures, foreclosures, short sales. I'm going to describe all this stuff, but distress is really showing up. We've been talking about it for a while. Everybody said we were crazy. Now it's like mainstream media is kind of tiptoeing through they're trying to, make the housing market seem like it's better than what it really is. And depending on what agents you talk to, the agents are, the cheerleaders, but the ones that are being brutally honest. The nice thing about it is, John, as brokers on our MLS, we could see the agent production in the back end.
Oh yeah.
It's like I could see. I could see every agent in multi-state region, and I could see the top performers. And yeah, there are some that are still doing decent numbers that most agents would love to have. But when we look at year over year, most of the agents, they're in the tank, man. They're really crying the blues. And look, there's no surprise, right? We inflated the housing market. It got to a point to where the home prices with the current interest rates made it unaffordable. Then comes taxes, tax increases, property tax increases. Then we have insurance increases. And now, God forbid, you need repairs or maintenance to that house that you didn't have inspected when you bought it in the last 5 years, if you bought a home then. And now it's starting to show up. But just tell everybody, you focus on a lot of REO properties, which is real estate owned. You help the banks determine if the borrower is going to default 18 months later. However long it takes for them to finally pull the rug out from underneath of someone that hasn't paid their mortgage. Right. You assess the property for them. You communicate with the bank. You let them know whether it looks vacant or not vacant, or whether it's just falling down. Kind of tell everybody what you're seeing in with that as far as pre-foreclosures.
Well, what I'm seeing now is we kind of talked about it before we went on the show. I'm literally doing a analysis of every closing since 2019 through 2024 in my area. Certain areas I'm doing first just because I know those will be higher foreclosure rate areas. But I'm literally going through all these FHA mortgages that are out there, and finding, and Melody Wright's been, basically she's been reporting on this for a while about FHA delinquencies are about 12, 13%, maybe 14. But what I'm seeing is that there's so many of these where they're getting these multiple workouts. These people have no hope of paying this mortgage at any point in their time that they're going to have this property. This is almost like, this is almost like, federal housing is what they're doing. I mean, this is a scam, this FHA and VA stuff, but the way they're handling these loans with all these workouts.
You sent some slides. This is just one example of what you're talking about. John, go over. I'll scroll down for you, but just kind of so everybody and look and just to save to protect the innocent. We blocked out some of these vital points to protect the privacy here of the borrower. But just kind of, I'll go through, explain what we have in this first slide, and then I'll scroll down as you continue to tell us.
You can see the sold price $237. And this is, any agent should be able to find this in their MLS. You can see in the middle there, financing FHA, because when an agent closes a property in his MLS, normally you tag it and say what kind of financing was there. Boom, that helps me search these out. All right, the close date, which obviously we blocked out, that was in 2020. Okay. Now one thing to keep in mind as we scroll down is the tax. It's $6,700 down below there. Okay, so if you move down to this is our mortgage. This is our mortgage page for this property. There's your tax amount right now, $8,044 for 2024. Okay, so that's up.
It was $66.98.
Yeah, so it's up $1,300 since he bought it. Okay, so that's more stress on this buyer at that point. But if you move down to the mortgage history, okay, you see in 2020, all right, where he bought it. This is the same. Obviously, we took the name out, but it's the same guy all the way through this. Okay, that did this. So in 2020, he closes on it at 232. 2022, he does a refi, and that may have been an interest rate, better interest rate type deal. We don't know. Okay, but then you move into you see the $10,000.
But he increased the mortgage. Mortgage amount. So he put another $50,000, $52,000 to his balance.
Right. And if you see on the same date, he got a $10,000, and that's probably the payments. Some of the payments that might have been due. So that was another loan that was given to him. Then if you move into 2023, you'll see he got an $8,000 workout. That's most likely his behind payments that they took and put on the back of his loan. And then you move into 2024, you got another $12,000 to work out his past due payments. So really, in reality, the government is just this is like like they're the parents of this guy. And he just keeps coming back for more money each year because he can't pay it. And I mean, if you total all this up, 20, 30,000 on top of that, he's over 314 for this property. He's never going to own this. And the worst part about it is, I guarantee this property is probably a disaster because he has no money. He's not putting it into the home. He's just living on a prayer at this point.
Yeah, and I'm certainly not. I'm laughing as you're going through this when you said that the government's like his parent, but it's kind of funny because there are so many of these. I mean, over 1 million people, 1 million households, and that was during I think 21, 22, and 23. Over 1 million households took advantage of at least one type of forbearance. Or not forbearance, but remodification, which is kind of what we're looking at here. Well, we didn't get it right that time. Let's go ahead and change it again. But here's the thing. They were only supposed to offer one modification. It's not pitch until you win. It's, guess what? Oh, well, I still can't pay my mortgage payment. Well, let's just go back to the drawing board. Well, how about if we do this? And all of this was just to prevent massive foreclosures from happening, which is one of the reasons why we didn't have very much inventory in the housing market.
It's the inventory problem. But sooner or later, you got to pay the piper on this. What are you going to do with this guy? And I sent you 3 of these, and I'm sending out. You saw the numbers I sent you of all the properties in that one area that I sent you. It's like it's like 20. I forget what the number was. Like 25% of these are bad. These FHA loans. I mean, I went through every one of them in that time period of January 2020 to December 2020, and I think I found 149 were bad. Were bad FHA loans, but 300 and whatever 76 were FHA, but 149 were the ones that were going bad. So we're sitting here. I mean, these are all. This is like the Wild West. I mean, they're just doing this over and over again. I think they just go into their mortgage online and they just press a button and it pops them into another loan. I mean, there's no way they're doing any homework with these folks. I mean, does he even have a job? I don't know, but what this is a waterfall that's backing up. That it's gonna. I think I told you in one of the emails they sent you. Next year, middle of the year, I could see this being a disaster because October 1st, they're canceling all these workouts. You get one workout, okay. And the worst part is if you have student loans that are delinquent, you don't get any workout. And per Melody Wright, 40% of the FHA loans have student loans. Okay, so that's going to be a whole nother cascading effect for this thing,
Let's talk about, you had said in a text earlier in the week, you had said that 1 in 17 of these FHA loans, based on the area that you're covering, is distressed. Kind of tell us what do you mean? Like that the siding's falling off the house and that the gutters are hanging down? I mean, what are you seeing as distress? Because you're not going inside, obviously.
No. When I say distress, I mean there's at least 4 or 5 of these workouts on there. Okay. So I'm going through each one of these mortgage histories, but what I'm also seeing is so many more than that have 1 or 2 that I'm not considering like horrible yet, but they're getting these workouts. Maybe someone gets 1 or 2 of them. Maybe his last one was 2024 or 2023, and maybe he got better. Now he's in better shape. I don't know, but probably not.
I mean, what are you seeing? I mean, obviously that's financial distress, but I can only imagine if you're not paying your mortgage and you're chronically late or behind and you're needing to have 4 modifications literally in a 2-year period. I mean, in 22 to 24, there's 4 different types of modifications on that. Pull that chart back up again, Joe. Thank you. There's 4 different modifications. So 10, 17, 24, 8, 31, 23, 6, 13, 22, and then 6. Well, like you said, it was probably to catch him up on his, it's conventional. I mean, I don't know. Maybe it was a,
but it's still, you see it's IDA that they're, and that's why I think that 2022 might have been a refi with an IDA loan where they gave him a whatever it was, where they give him help to buy it. But still, he's a year later, he's into trouble.
Well, I guess you can't modify it. You have to bring them up to date, I would guess. So, yeah. What a mess.
And then a year later, he's in trouble. Yeah. A year later, he's in trouble again. And if you've had a loan mod, come October, you're only going to get 1.
Yeah.
In 2 years, which means and is the government going to let that happen? That's the key question. What happens when all these start going south? Are they going to step in and go, well, wait, we need a better program than this, and that's what keeps this thing alive. That's why we have no inventory anywhere. Okay. And this is, this could be 5, 10, 15% out there of properties we could sell, which would help soften us up, bring down prices a little. But we're caught in this trick bag where they really can't do anything, and they've set this date for October 1st. I don't even think they even know what they're going to be stepping into, because I mean I'm scrubbing all these properties, and one thing too for your agents out there that are actually listening,
wait a minute, you're going to talk to them now? Come on, John. The last time you did that, you had a bunch of idiots reaching out to you, huh? Come on.
I'm like the government. I'm here to help,
You're here to help. All right. Well, help the agents that are listening, because I tell you, I do have to say, it was a little funny when you were telling me about the last time you came on and you were trying to give agents advice on how to take on the BPOs, broker price opinions, right? In other words, when when homeowners aren't paying their bills, the lender, the servicer, is going to order up a BPO to say, hey, could you drive by? Could you check out the house? Does it look like anybody's living there? Could you take some pictures, give us an assessment? And what do you think it's worth if we go to sell it? and you were saying that, hey, you make like what, $50 a house or something.
Yeah, it's not funny.
But
You're
the
not
funny
in there
thing
for the money.
But the funny thing about it is, tell everybody what the agents were saying to you.
Oh yeah, I had a huge response. I had so many people tracking me down. Hey, I want to get into BPOs, and then I'd give them the information. They'd come back to me and go, "Hey, they're only paying $50." It's like, well, duh. That's what you do the BPOs, and then the bank might come to you later and list it with you. So
This is
you're not
the
making
issue.
an income.
So this is the issue with the agents, right? They're not making enough money. I mean, they could go out and make $500 going by 10 properties and taking a bunch of pictures and doing a CMA that they do for free, and they're bitching about making $50, you idiot. I mean, what the heck? How about the fact that if the bank may hire you to actually list the house where you can make some commission?
They missed the point on that one.
They missed the point.
Sure.
Go figure, right? I mean, welcome to our world and dealing with the, all right. Well, go ahead, plug for the agents again. Tell them how they can get involved with this FHA stuff.
Go through your MLS 2020 through 2024, 2019 even. Go through all your closed and search out the ones that were FHAs. Go into the mortgage history. These things jump off the screen at you. And start mailing them. Hey, are you having trouble paying your mortgage? Give us a call. That kind of stuff. I mean, there's plenty in there to mail. Trust me.
But then you have to spend money for stamps.
Yeah, well, and I'm not sending you stamps too. So.
John, come on, man, help us out, would you?
Yeah, come on. You said you're here to help. What the hell?
That's right.
Anyways.
Oh man, all right, buddy. Well, it's great chatting with you. I'm glad to get you on here and talk about. What you're seeing with the distressed property. Anything else you want to add before you jump off? I know you're getting ready to roll out of town, and you got a lot to do. Yeah, storms
are coming, man. I'm seeing it. It's the whole thing's starting to crack up, and you don't see it in the news, you don't see it in the media. I saw DiMartino Booth. She was on. I think you just interviewed her, didn't you? A couple weeks ago. Yeah, and she was saying, "Oh, the Fed."
Saturday. A couple weeks ago, it was Saturday.
Oh, was it? Oh,
it was like 3 days ago.
Sorry, I'm getting out of town. What can I say? But she was saying, that the Fed's doing a disservice. He should be lowering rates. They're trapped. They don't know what to do. He doesn't want to do anything because he knows if he lowers the rate, the inflation's going to take off. They still haven't hit 2%. I mean, everyone's like, oh, it's coming down. It's coming down. No, it went up. Even though it's just a quarter of a percentage point or whatever the hell it is, it's not coming down. And he knows he's painted into a corner. But then all this stuff's going to come apart, and all these more FHA mortgages. I haven't even gone through the Fannie and Freddie stuff yet. That's just FHA. Fannie and Freddie are giving the same workouts. I mean, there's probably, in my estimation, there's probably 25% of these are distressed. Depends on where you're at. I mean, there's certain areas where there's little distress, but there's just going to be areas, that are going to be hit hard by this, really hard. But anyway, it's coming.
Danielle took some heat on my podcast too. I mean, she had some great ideas, but I think the big thing is looking at it from we need growth in the United States. Our economy needs growth. Right now, we're not seeing it. And if we don't have economic growth, we can't pay down our debt. That's not just for the government, but it's also for consumer debt. You figure if you're not able to make more money at your job, or you have no opportunity to do a side job, or and you can't save money, then what happens is your debt continues to grow at an average of 24%. Credit card debt alone, $1.2 trillion, just about. So you take that and if without growth, so what she was saying is to reduce the Fed rate, which has nothing to do with mortgage rates. We saw that when they reduced a half a point, mortgage rates shot up. But what she was saying is that if they reduce the overnight trading rate, the rate where banks can borrow and lend money, that it would stimulate growth. I think it's too late. I mean, if we look back at
I do too. I think it's too late. It's correct.
What happened in 2007, they tried to drop the Fed rate. It didn't work. We still had the financial explosion. And I think what's happening is because everything is such a lag effect, everybody's hopeful and they're waiting and hoping that things are going to get better. But what's happening is the debt's not going away. And every day and every month, that becomes compounding for consumers. And what we're seeing now is consumer confidence is dropping, which is sort of like those next steps. But
did you see the builder confidence this morning?
Oh yeah, I can pull it up right here.
It's just all feeding into the same disaster.
Yeah, I mean, this is builder sentiment. This is today. And by the way, the Fed's meeting they probably are home by now. It's 3:20 on the East Coast here. The Fed, the FOMC meets today and tomorrow, probably somewhere around tomorrow at 2:00. We'll know what their plans are for the Fed rate. But the builder sentiment that you're talking about, John, right here, is the third lowest reading since 2012. And interestingly enough, I had this pulled up to show anyway, so I'm glad you brought it up. We could just read a little bit here. In further sign of declining builder sentiment, the use of price incentives increased sharply in June as the housing market continues to soften. One of the things that I want to point out here in pink, and I want to push back a little bit on this, is because I disagree with what this article says. And again, this is a politically motivated article, right? When they're trying to still go off the fact that elevated mortgage rates,
the rates are too high,
and that's bull. It's bull.
It's bull. Yeah,
it's bull. Okay, we are at historic averages with mortgage rates. 7.7% is the 50-year running average for a 30-year fixed rate mortgage, folks. Okay, it wasn't until we saw false suppression after the GFC, the global financial crisis or great financial crisis, whatever you want to call it, of 2008, when they started dropping because the Fed was buying mortgage-backed securities and then suppressed mortgage rates. You would never seen 2.7% mortgage rates. If the Fed wasn't involved, it would have never happened. Never in history has it happened. But here these builders are going on, crying the blues, saying, oh, well, buyers are increasingly moving to the sidelines due to elevated mortgage rates. Hello, you've been buying down mortgage rates for 3 years almost. Right?
Yep.
In 2023, in October, they had the worst month that they recorded in decades in the new construction, sector, home builders. And here we are. They're still crying about, and I mean, the tariffs are what they are. Building materials, lumber prices are down. I mean, for crying out loud, they were building in some of the highest priced lumber that we've ever had in 2021, 2022. They weren't crying the blues then, right? With elevated, what it is buyers they're waking up. Buyers
don't want nothing to do with it.
They've sniffed the smelling salts. They've come to their senses. They've seen their peers, right, that they're complaining to their friends like, oh yeah, I can't go out with you this Friday night because our homeowners insurance went up and now we don't. I mean, this is real, right? So now the ones that don't have the houses are like, well, I have no intentions on buying right now because my friends are struggling, right? They're spending money fixing their house that they didn't get a home inspection on, and now we get the Builders Association saying, we got elevated mortgage rates and tariff. It's economic uncertainty. No duh.
Todd, they're jumping through hoops right now to make sure these prices stay high. So they're giving away the farm. You might be paying $560 for this house on paper, but in reality, you're getting it for $470 because they can't let those prices go down. So really, it's just the whole thing is a big scam. I swear that this FHA stuff has been incredible. The stuff I've uncovered. It's like, just wait. This stuff is just a mess. These people can't pay. They're at the point where they don't want to pay. It's going to be a bomb when this thing goes off, But who knows? Hey, we're still crazy, and they think we are. So what do we know?
Well, it's funny because I get emails now and people that reach out and they're like, yeah, I really doubted what you were saying. Home prices would only keep going up, but I'm really seeing it. And a lot of them they're agents, and the agents are saying, hey, I'm still selling houses, but you're right. It's weakening. We're seeing the power of the buyer is so amplified right now. And what people are seeing, they're reading headlines, and then what they're doing is they're saying, well, my neighbor's house went for list price or close to list price or even a little over list price, 5, 10, or 15,000, whatever. Maybe the agent priced it to get multiple offers now, which they're smart if they're doing that right now. You better be telling your sellers, don't play this game. This is not the time to try and play a game with, oh, well, if it doesn't sell in 2 weeks, we'll drop the price. No, drop it before you put it on the market and hope that you can get it going the other way. And if it doesn't, that means it wasn't worth that much. But what we're seeing, John, and I don't know if you're seeing the same thing, but we're seeing where the buyers all the way up to the finish line are renegotiating the deal. Yeah. And, it's like, oh, well, this didn't, we want this. Well, wait a minute. We just had the home inspection. You've already decided what you want. No, we thought about it. We want this fixed now. And guess what? The sellers are doing it. They're doing it.
It's still smoking hot in Illinois. It's got, like I told you off the air, it's one of the hottest areas out there right now in the country. And I mean, it's just anything you list is gone unless it's priced too high. But it is good. The inventory is growing slightly, but everything's pending. You go into the system, everything's pending.
Well, let's pull this other chart up while you're talking about it, because you are, and this is a friend of mine, Lance Lambert. He's a regular contributor to our show. In fact, we're having Lance on once monthly at the end of every month to kind of give the monthly update. We have a playlist actually on our channel called Lance Lambert if you want to check it out. Also in the show notes, besides John's information being there, that you can reach out to John directly, we also have Lance Lambert's information down there too. You can sign up to get his free newsletter, links to his website. But anyway, he does a great job covering the country. I think his expectation was about 150. We'll see this month, but nationwide of the 300 major markets across the country, I think well over 100 of them now are in decline. But he did publish this. This is among the nation's 200 largest housing markets. These 32 have the lowest active inventory. And that is the big reason why you're seeing these areas where inventory is still below pre-pandemic level. The sellers still rule the roost. Now, who the heck's buying them is the question, because if the seller's ruling the roost and you're buying it, you need to be prepared to take on all of that deferred maintenance, all of the broken things that are wrong with the house, and you better be prepared to fix it yourself. Yeah. But we are seeing that table turn.
Yeah, look who's number one, Peoria.
Yeah, right. So Illinois, you're right. You're still in a hot market. So maybe the agents will ask you how to move quickly to Illinois so that they can still grab on to some of the last bit of the real estate commissions available in the country.
I'll tell you what I'm hearing is that people are moving back. All these people that left during the, hey, we can go live wherever we want. All that nonsense, relocation and all that. I hear a lot of people are moving back now. People are leaving Florida because that's just an albatross at this point. I don't know. The condo HOA fees down there are just burying people. So I don't know. It's still very strange out there right now.
Well, we appreciate you, my friend. Thanks for coming on. We've got, you talk about Florida. We got Phil Simonetta on deck. We're going to bring him in and let him, it's funny because every time I talk to him, I get a whole, amazing amount of comments that says that he's not telling the truth, that Florida is doing fantastic, and that Phil just lies through his teeth. And it's funny because I don't think he does. And I just called him the other day and I said, hey, Phil, you check out the last video we did, one of the latest comments, because there was a real estate broker of 25 years down there in Central Florida. And he said, everything that Phil is saying is 100% accurate. But anyway, we'll talk to you soon, John.
All right, buddy. Take care, man. We'll see you.
All right. Let's bring Phil in. Been patiently waiting. What's up, my friend?
Hey, what's happening, Todd? How you doing, man?
Well, you're not wearing long sleeve shirts in Florida, I guess, by now.
No, it's just raining. A lot of rain, man. It's been raining like crazy down here, but we're good. We're good.
Is it hot?
Yeah, humid. Very humid. Yeah.
Well, tell us what's happening in your world.
It feels like July. Yeah, it feels like July. It's warm. Yeah.
So, I just wanted to start off by saying, that everybody thinks that you're lying about the Florida housing market. They tell everybody in the comments, just leave our state alone, go away, go back to California, go back to New York, go back to where you belong. And you're from Philadelphia. I'm wondering whether they are trying to push you out of Florida.
No, I don't think so. I mean, it's I don't think so. They could try, right?
They could try.
They could try.
See what that Philly boy's got. Tell us what's happening, man. What's going on in Florida?
It's interesting. I mean, the inventory is exploding still. And look, it's been 7 months now. We're having 12, 15,000 units hitting the market every 7 days. Right now, I just checked out what happened in the last 7 days. We have 11,700 new units, 16,085 price drops. And of the properties that are selling, we had 6,800 close, but 2,377 fell apart. That means the contracts were canceled. Bad inspections, bad roof. They found that their insurance was too much. And that's really what's happened. And there's a lot of expireds, cancellations, and withdrawals, over 4,000 of them in 7 days. So a lot of the actual cancels are higher than the withdrawals. People are actually fed up with the agents that don't know what they're doing. That's what's happening. I mean, it's kind of crazy, man. On my end,
give an example. How would you be fed up with an agent that doesn't know what they're doing? Tell us what's happening.
Yeah. Well, listen, everything's overpriced.
Enlighten us.
New. Yeah. Everything hitting the market new is overpriced. They're not advising the clients. They're not telling the sellers, look, here's the market, here's the trends. Everything's down about 12%. They're still pricing at what it was a year and a half ago. They're not giving the sellers reality. So they're telling them what they want to hear. Sellers are on the market 2 weeks, 3 weeks, 4 weeks, nothing, no showings, no calls, because they're 25,000 over. I'll give you a perfect example. I'm working with a buyer. We have, 6, 7 months now looking at properties in and out, 4 or 5 properties we made offers, didn't get the deal because they're not willing to overpay. Well, we just put an offer on a property last week and, we did an escalation clause, nice area. I mean, there's certain areas that are still holding, we did an escalation clause up to like 510 grand. Well, somebody paid more. And I just got a call yesterday. The deal fell apart and we ended up getting a deal for 500 because we went back down. We didn't have to go up to the escalation. And I just
what
got
was the list price
15 minutes ago. List price was 487. This 487.5. This property, beautiful in a golf community in Orange Park.
Where?
Orange Park. It's outside a suburb of Jacksonville. Beautiful on the golf course community. And someone actually paid over the 510. And we thought we lost it. We thought that was really odd.
Well, they didn't pay over the 510 because it fell through.
Well, exactly. Well, yes. And then
they didn't pay over 510.
And hey, listen, we have the appraisal. If it comes in at 480, 485, we're going to have the appraisal contingency. So, the 5 got it for us, and we're just getting ready to take care of that now. That's just an example of one of the scenarios. But all the listings, all the deals I'm looking at, I just dropped one down over. This one was in Zephyr Hills. We just dropped it down. We're the lowest price in the neighborhood. We're starting to get traction. But what's happening is, even when I'm talking to sellers, I'll call the expired listings and I'm talking to people, and the sellers know. Like, I know we were priced a little high. We didn't really get any information. I didn't really get feedback from the agent. I tried talking to them. They didn't really get back to me. Because I'm calling cancels. The first thing I do is I call cancels because they're easier than expireds, right? Canceled people are already pissed off and aggravated.
They're pissed off, right? Yeah.
Right. So when I come in, I say, listen, I own a real estate school. I own a real estate brokerage. I'm taking a test next week to get my MLO license so I can now offer you services. I can give you your mortgage. I can give you a refinance. I can give you, I can represent you as a buyer. I can represent you as a seller.
Whatever. Get to the point.
That's the point.
We know you're great. You got everything. What's the point?
No, listen to me. What I'm saying is I'm consolidating it for people.
I hear you. People, that's great. You're going to be a star one day. What are the buyers doing? That's what I want to know. What are the buyers and the sellers doing? Let's not talk about you. Let's talk about them.
The buyers in general have slowed up. Buyers are down 70, 80%. I mean, it's average prop time on the market now, 6 months ago, a year ago, you're looking at a month to 3 months to get under contract. Right now, it's anywhere from 45 days to 90 days to even get under contract. The conversations with the sellers are that, it's going to take a little bit longer. There is some hope though, Todd. It's not public yet, but DeSantis, they passed a law that eliminated about 60 to 70% of the lawsuits against the insurance companies. And about 30 insurance companies came back into Florida in the last year and a half that left. Now, this is behind the scenes. It's all being done. It's not a public thing yet. And if you notice, some of the insurance policies are dropping 10, 15%. It's not huge. They've tripled. But you got about 30 companies that came back.
They've gone up 300% and they're dropping 10 or 15%. There's a deal.
But what I'm saying is they're coming back because there was a new law put in place that's going to start eliminating a lot of these ridiculous lawsuits and frivolous lawsuits. And the insurance companies are feeling a little bit better about coming back. Now, we didn't get a hurricane.
What's a frivolous lawsuit? I had a hurricane. I had insurance. My roof blew off, and now I want it to be fixed.
No. The frivolous lawsuits were when somebody had like a little leak, and then the insurance adjuster would come out and make a big deal and lie, and then they got them a roof replaced for a little leak that shouldn't have had the whole roof replaced. There's a lot of that went on, and then people were starting to sue, and the adjusters got involved and started to sue. So all those frivolous lawsuits, not that your hurricane blew your roof off, that should be fixed, right? But what I'm saying is, in general, the frivolous lawsuits, the stupid things that they're really just trying to.
Sounds like you're defending insurance companies.
No, not defending insurance companies. It's got to be fair for everybody, dude. I mean, it's not the insurance companies. It really. I've
never had a great experience with an insurance company. I mean, I'll tell you what. I just had a garage door at one of the at a mechanic shop right up the street from us. I took my truck in there to get it fixed. The door comes down and crashes down on me on the roof of my truck, and they said it was my fault. And they had cameras around the whole damn thing or whatever just to get me, on the collision and instead of the comprehensive. Rip off these insurance companies. I can't. Yeah, I couldn't see it. I mean, it was, the thing came down and crashed out on my truck, and it was my fault. I'm looking at the guy that's going like this, right? Like, come on in. The door was open, the green lights or whatever. But anyway, that's a little sidetrack.
I'll give you another quick example. Let me give you another quick example. I have a house that we were supposed to close a couple weeks ago, and the real estate agent disappeared like a week before closing.
You told me about that.
Yeah, I told you about that. I got it under contract now. It's closing on the 17th of July. I got another contract on it, but they just disappeared. I had to file a complaint. They wouldn't sign the cancellation.
That won't go anywhere.
Yeah, well,
nothing happens.
But we ended up getting to sign the cancellation.
That's right. But you filed a complaint on the real estate agent.
Yeah, it's the Wild West, dude. It's the Wild West.
That's crazy. All right. Well, look, tell us how should buyers be negotiating in your market? So if you're in Florida and you want to buy a house and it's overpriced and it's been on the market for 180 days or more, I mean, what's a buyer supposed to do? I mean, you have that house that's $500,000 or $550,000 or whatever that's probably worth $4. What should a buyer be doing?
What you're doing is I'm pulling comps. I'm showing them comps and everything, and I'm attaching.
Yeah, but comps are still too high.
They are, but we're coming in. The buyers are waiting. The sellers are starting to reduce, and the buyers just aren't buying. They have the money. They're ready to go, but they're not willing to overpay. And that's happening 70, 80% of the times. Buyers are just waiting. There's no hurry. They're like, look, when the price comes down, I'm going to do it. These people I just dealt with on this whole deal, same thing, ready to go. We just waited. The file was underwritten. They were ready to go. It's 15-day close, But
do you think the housing market is overpriced?
100% overpriced. I build them. You build them. You know what these things are worth. It doesn't make sense.
But they always say the house is worth what somebody's willing to pay.
Yeah, but they were willing to pay with free money, COVID money, junk money, 2% interest rates. It was like the clients and the people. We talked about this before. They work on a payment mindset. If they can afford the payment, they'll buy it. So if the rate's 2%, they'll spend $580,000. If the rate's 6%, they're going to spend $350,000. As long as they can figure that payment and afford it. Same thing with a car. People, they're not. I don't want to say not educated, but people just go with the flow. You know what I mean? They just want to be able to afford a payment and have a budget and fit into it. So the whole problem is either your rates got to come down or your price got to come down. Your rates got to go up, or your rate's going to come down and prices are going to go up. It's all going to fluctuate in that seesaw, man.
I want to talk about that. I'm glad you brought it up because one of the articles that I'd read, a day or so ago was talking about how sellers can do rate buy downs. And I want to just kind of explain that a little bit. So the big thing right now is 2-1 buy downs. And what that means is it's not a variable rate mortgage. Let's just say you get a mortgage rate at 7%. That's the going rate. Right now, it's probably 6.75, 6.78 across the board. We're in a country where if your credit's bad, you pay more. So the top tier credit, the 800, 850 credit scores get the best rates. If you're down in the sixes, you're going to get the highest rates in a lot of cases. But more importantly, this rate buy down, because a lot of people are saying, hey, ask the seller, instead of dropping the price, do a rate buy down. I've always been one to say, I hate the term date the rate, but at the same point in time, I don't want you to bank on rates coming down in the next 2 years. If they happen, that's great. Get the better price now on the house, because that's the most important aspect of buying, is a better price, not a better rate. You can always refinance should that be the case. I can't believe I said that. If you buy it at the right price, you can refinance. If you overpay, you can't refinance because the house may be worth less than what you owe the bank on it, and you would have to bring that extra money out of pocket. But I just want to tell everybody, on a 2-1 rate buy down, what that means is year one, if you have a 7%, we'll just go with that because it's easy, 7% mortgage today. You sign those papers saying for the next 30 years, you have a locked-in 7% mortgage unless you refinance or sell the house. And essentially what happens is that first year, a seller, whether it's a new home builder working through their company that they own, mortgage company, or whether it's Joe and Mary in a residential neighborhood, selling an existing home, they can take money and put it with an escrow agent that oversees that money. But basically what happens is they buy it down. So 2-1 rate buy down, the first year for the buyer would mean your mortgage rate is 5%. Your payment is based on a 5% rate. Year two, it bumps up to 6%. So the 2-1 rate buy down, first year is bought down 2%, 7% to 5%. Year two, it goes up to 6%. Year three, it goes back to 7%, which was your original rate. The problem with that is, again, and that cost about $15,000 for a seller to do that on a $500,000 loan. Okay, so if you're financing $500,000, keep the numbers simple, 15 grand about, maybe some fees involved, but that's how much it will cost to do a rate buy down. Get that money off the house, off the price of the home.
Do the math. How much are you saving on the 2 years at a lower rate? It's got to be close. It's not.
Well, you're saving $15,000.
Right. So you're better off to take the 15 grand off the house and just keep the 15 grand and then 7% it all the way through until you refinance or something.
Get more than 15,000 off the house. Negotiate. Find an agent that's a master at negotiations. Find a property that the seller's been sitting on the market. Look, you can do this. You can do this. Stop looking at houses that just hit the market in 2 days or 1 day, unless you have plenty of money and you're not worried about affordability and your jobs are strong and you can go out and you can spend that money. Then go look at the house the day it came on the market and get involved in the bidding process, or wait until that house sits on the market for 14 days, 21 days, 3 months, 6 months if you're in Florida, and then start asking questions with the listing agent, like, what's going on with the house? Do they owe more on it than what it's worth? They may not be able to give you a better price, right? They may not be able to give you a better price.
3, 6, 9, 10 months on the market, all over the place, man. Some of them over a year.
I want to pull something up here, Phil, while you can just hang out with us. But I want to pull something up here because I want to show everybody what's happening now. This is my MLS, all right? And again, this is spanning Maryland, D.C., Virginia, New Jersey, Delaware, Pennsylvania, if I didn't already say that. You can see the states in the left column here. There's 25 per page. But what I wanted to do, and just to kind of give you some insight here, because a lot of people are reaching out, they're saying, what is going on in the housing market, Todd? I'm not seeing the prices drop as much. I'm not seeing inventory hit the market in my area. And so I go to the data, and I just want to look at the data because it will tell us a bigger story. Real estate is lagging. It's a backward looking story. But what I like to do is go straight to the data of the MLS and try and figure out what's happening in real time. So what I did here was I selected, and to play off of what John was talking about, was distress. Earlier, if you're just logging on, you can go back and watch the first part. But John was talking about the distress, the REOs, the real estate owned, a bank foreclosures. But I've selected here bank owned or REO, real estate owned. That's a bank owned property.
Are they exploding up there? Are you having a lot of that?
Well, I'm about to show you. Show you. Bankruptcy, HUD owned, which is, government owned property, something that's in foreclosure, the process in foreclosure, notice of default phase, or short sale. And what a short sale is, that means that they're listing that house for less than what that property is mortgaged for. Okay. So they're listing it at 480, but they owe $500,000. That becomes a short sale. And what happens is sometimes the bank has already approved the list price, as they can push it through quickly, that if you buy it at the 480, but if you go to 450, put an offer in at 450, the bank may need to get back involved and reapprove a lesser amount, or the bank may have not even started to think about the giving a lesser amount or allowing a sale for a lesser amount than what's owed. So short sale could be kind of funny.
I just closed that short sale. It appraised 393 6 months ago. It closed at 340.
Yep. So I just want to kind of go here and show you the results of this. And what I did was I sorted these, and these green arrows are price reductions. The red arrows are price increases. Now, why would somebody increase the price? Well, maybe they had to go in and do some work, and it was originally priced distressed, and the bank went in and improved it, and now they want more money because they made it ready for a buyer. But what I wanted to do is just kind of go through this. So I picked, again, to show you how we're coming up with this data, anything that's incoming soon, that's currently active on the market, that's active under contract, that's pending sale, meaning that the seller no longer wants to show the property, they're happy with the contract that they have, and then closed in the last 6 months. And what I wanted, the reason why I selected so much here, is I wanted everybody to see the quantity of properties that have been in financial distress over our region, the Mid-Atlantic region. But the other thing I wanted to show you here, because again, there's 156 pages or 3,897 financially distressed in one form or another properties. But I wanted you to see that these properties, some of them are very expensive. You see this first page is all over $1 million, right? It goes down to 1.25. We're on the second page, still up to 900,000. So these are not $200,000, $300,000 homes that are in financial distress. And we can just pull up
days, Todd? The last
180. Yep, last 6 months. So, and again, you can look at these houses, the pictures of these houses that are being sold in one way or another under financial distress. So, guys, we're not talking about people that you would think about losing their home. I mean, look at this one on Mount Pleasant Road, $1.5 million, right? Obviously, that looks like a lot nicer home than 1.5 million. So, and the other thing is just,
no, it's active.
No, it's that's active. Yeah. Yep. So the other thing that I wanted to show you here on this is I wanted you to see that the pulled it over here. Maybe
that's something, man. I mean,
it's a lot. It's a lot.
It's a lot of the higher end, and that's surprising because they're saying the higher end's holding up, but it's obviously not. The number. See, that's what I'm saying. Everything you're hearing, people talking about, everything they're showing, the numbers don't add up to what people are saying in any of the markets. Nothing's accurate. It's kind of like people are just throwing smoke out there. I don't get it. I don't know where this information is coming from. When you look at the numbers here, it doesn't add up to what these talking heads are saying. It doesn't make any sense. And eventually that all has to correct, right? Reality has to come into the picture sooner or later, right?
You would think, right? So, but look, these are the days on market, just to try and give you some kind of an idea of what we're seeing on these financially distressed. So that first one here, 148 days. This one closed 112 days. So it's all across the board. But we're seeing the uptick. I mean, it's happening, right? So when I just want to talk a minute about it, because when you're looking at buying a house right now, your agent can pull up these different types of properties. You just have to be careful, because buying a distressed property can really be a problem if you don't have money to fix a property up. And a lot of times you can't even get financing. So depending on if you need, financing for the house, if it doesn't have an operating heating and air system, you can't finance that property. So you really have to be careful. A lot of times when people are going through financial distress, they let everything go. They're not paying their mortgage payment. They're not fixing things either. They know they're on a short term there, and they're going to be moving out. So anyway, Phil, give us some predictions, man. What do you think is going to happen over the rest of 2025?
Yeah, I tell you, unless interest rates drop, which I don't know how they can, like if they lower them, inflation is going to go crazy. I don't see buyers taking the risk, and I see the inventory still growing. And this thing can drop 20, 30, 40. Like it did it in 08, and there was no problems the way they are now. So I'm telling you, I'm holding money and I'm waiting, man. I mean, there's no reason to buy anything. There's no reason to. There's no deals. Investors are crazy to buy and flip and do anything right now, because there's just, unless it's not their money, the only people spending money, it's not their money. That's what I'm seeing, and then you have the only people who are closing deals and buying now are people who need to move, people who've been renting, people who've been saving up. People in general aren't moving because they don't have to. There's no migration. The migration is down 70% to Florida. It's the lowest it's ever been in history. People coming to Florida. It's just gone, and we're going to see what's going to happen though. The rest of this year is going to be tough, man. I think you're going to have more refinance. I think you're going to have more people trying to cash out, just to get through it all. Look, if a bomb goes off in the wrong place, we're going to war, Iran, this thing. One thing happens, it's going to affect everything. Look at the job market. Look at the job numbers. There's so many factors that are all negative, but you got to find the ways to make the deals. You got to find the ways to make things happen. And listen, I just finalized a deal an hour and a half ago to take over to acquire another bar and restaurant. I literally just finalized it. My lawyer's looking at the paperwork. There's opportunities to make money. You just got to know how, and you got to take a little bit of risk.
There's opportunity to make money not selling houses.
No, listen.
Phil's doing everything he can to try every other business, but he's getting the loan officer license. He's getting the bars going, bar businesses going.
I've been
selling pizza. Come on, man.
Yeah, man. I've been in business since I was 19, man. All different.
Well, that's good, buddy, because I think being diversified and having multiple sources of income is a good way to go in this climate.
But
I do want to.
I got to tell you, I've never been busier, man. I'm closing deals. There's a lot going on. It's just you have to know how to.
Well, I'm proud of you, man. I'm glad that you're paying your mortgage payment. Let's bring up our poll. We have a poll that is here. All right, let's see. This says nationwide demand to sell has outpaced buyer demand. Who wins the remaining 2025 housing market? What do you say, Phil?
Yeah, buyers for sure, man. Buyers for sure.
So do you think the investors are done? You're down there in a big investor district. You have
the investors, unless they can get, they're not doing anything. They're lowballing 50, 70% off. The investors, the money dried up. Their bank dried up, man.
I have a video that's coming out. Todd Sachs, he wrote a book called 2008, What Really Happened. And it was interesting. That's coming out. Joe, is it this week, Saturday? It's coming out this Saturday. One of the things that him and I were talking about, and first of all, I asked him, obviously, why would you write a book about 2008, 15 years later? He had a good answer. that and tell us something that hasn't already been said. But one of the things that we sort of had some pushback on was that I asked a question: do you think that investors, Wall Street companies, should have been allowed to buy hundreds of thousands of houses, millions of houses? And through the conversation, he said, well, I don't have a problem with it. And this is not knocking him. He's not a real estate guy. He's not a housing guy. He's a finance guy. He's a CPA. But he said, I don't really have a problem with it. He said, because what happens is businesses will come back into the equilibrium. So in other words, if they overpay for a house and the market corrects, they'll lick their wounds, they'll take their losses, some will go out of business. And I said to him, I don't agree with you on what you're saying. Because here's the problem that happens. If a business goes out and expands, and by the way, with other people's money, when you're a Wall Street company, you're taking other people's investments, you're gambling with their money. Oh, well, you're not, probably not the best term to use. You're taking those investors' money and using it to expand and use it wisely to bring them a return on their investment. So yeah, maybe you don't get hurt as much as your investors do. But here's the problem. If a Wall Street business decides to expand a retail store, they go out and they buy the wrong product or buy too much product. And guess what? Then they liquidate the product. Okay, so they lose money, but nobody's harmed. When Wall Street companies get involved and compete with homeowners and make them pay more money to compete for a house and make them give up their rights, like getting a home inspection, and then that Wall Street company says that, hey, you know what? We made a mistake. We're going to lick our wounds and drop it. What about the rest of the people that are paying for it for the next 30 years that competed with them? What about the fact that they're paying a lot more money for their home than they would have been in areas of Texas where in 2022, I think it was 2021, 50-some% in some of these cities in Texas were real estate investors, 50-some% of the sales. Right. Yeah, that's not like any other business that just makes bad decisions and licks their wounds. These are creating.
I tell you, like, the way you combat that is you have to raise taxes on investors.
They do.
Charge more. Yeah, but there's got to be
investors pay. They don't have homestead tax.
Well, yeah,
exemption.
But maybe chart. Yeah, I mean, it's tough because how do you limit that in a capitalistic society? You
mean in a crony capitalistic society?
I know. We talked about that before. That's a tough situation. If you take the companies out, then individuals can't own them in LLCs and things like that for legal reasons, and have multiple properties. I mean,
why is it a homeowner can't deduct depreciation from their home because it's falling apart and that they have to spend more money on it every year? The investor gets to do that.
Yeah, I agree with that, man. I agree with you on that.
Give the homeowners the same
benefits,
tax benefits as the investors get.
Well, I'll tell you, Todd, the investors can't be making money. I mean, if you look at the cap rate of what they're doing and what they're buying, and you look at the cost to manage it and look at the cost of running it and operating it and the taxes and the insurance, and I mean, everything is up. I mean, you look at their cap rate's got to be negative, and it's not so bad because it's not their money. They're making the money on the transaction and making money on the operation, but the investor, the hedge fund and whoever's investing in that money, I'm telling you, man, unless you buy these things pennies on a dollar, the operation over the next 10 years on these multi-units and things, I don't know how they're going to make money, man. Rents are coming down.
For the first time ever.
Yeah, I'm telling you.
Rents don't fall. I mean,
I know.
Rents don't fall, but they're falling. They're falling.
That's a sign right there, man. I'm telling you. Every fact. Look, people say you lie, this, whatever. Look, they don't want to face the truth, man. The truth is the truth. Numbers don't lie. People do. Every time I tell you that. But
I'm talking with a couple buyers that are in leases at their apartments right now. This is really interesting because they're, you have to check your lease. And what I try and it's a famous question. Hey, my lease is expiring. I want to buy a house, but I haven't found anything yet. Should I sign another year, or how long of a lease should I sign? And these apartment complexes they see the writing on the wall. They know what's happening. They're seeing vacancy rates and tough times coming for them. And what I tell people a lot of times is, hey, if you can move home, if you don't want to sign that lease and mom and dad will let you move back in the house, or you can go live with another relative or a friend and save that money while you're waiting for the next couple of months or 6 months. Because what's happening is the apartment complexes are sending out these lease renewals, and man, they're really incentivizing people to sign 15, 16, 18-month leases, right? They're like, we don't want to, if you're going to be penalized if you sign less than a year, you're going to be penalized for signing a year because you're looking at the numbers on the renewal and the offer, and then they're encouraging people to jump on for 15, 16 months. So, it's a tough spot for these renters that are kind of like in that limbo phase where they want to buy, but they have a lease.
First thing to do.
What do you tell people?
I calculate for them. Here's what it costs you to rent. Here's what it costs you to buy. Does it make sense to buy? And then the first thing I'm doing with the buyers, I'm looking up all the assumables, and I'm looking for ones that have the least amount of money down. Something somebody bought at the end. They don't have a lot of equity. I closed a deal on that not too long ago, and it's assumable. It's just a matter of finding the right deal. I keep going back to that. There's deals out there, but you got to find the right deal. It's not like it's going to fall in your lap. Not going to happen. That's what I tell them straight up. And that's really what it comes down to.
Yeah, that's what you have to do. But I tell you what, I don't know how you calculate the cost of ownership when you have all the maintenance costs and things like that. I just want to segue here because I want to bring something up here that I'm really excited about. Probably in the next 2 weeks, we have and Joe, I don't want to preview it. Don't pull anything up, but I have something I have something really exciting. I have my homebuyer course that is about to go live. And we're really close. There's a couple things I'll tell you about. One is we are starting an online community. And in our online community, you'll be able to check out all of our content ad-free. It's going to be less than $100 a year, $8 a month. It will have ability for our followers, our audience, our community to learn from each other, gain a lot of knowledge, real estate knowledge, whether you're existing homeowners or you're a home buyer, looking to buy a home, whether you're a real estate agent, a contractor, a home inspector. It's going to be a community that is really going to be interactive, that you guys will gain a lot. And like I said, we're going to take some of this away from the YouTube platform because we know that a lot of times the videos, they're not shown. And so it's going to be ad-free content, live Q&As weekly with me, and a lot of good stuff coming. But this home buyer course, I really I pulled the curtain back on this. I don't think anyone has ever put together such a comprehensive yet simple, it's called Todd's Simple Home Buying Course, yet simple course. It's 14 lessons. I'm just plugging it right now because it's close. Next 2 weeks, you're going to be able to buy this course. It will save you potentially thousands and thousands of dollars. I am teaching people how to transact without an agent if they choose to not have a buyer's agent, how to potentially save the commission, and I'm getting choked up here.
I'll tell you what, NAR should make it a required course, Todd.
You know what? Every real estate agent in America should watch this if they want to, because they'll learn more than they probably have ever been taught. And we go over everything in this course, man. I'm telling you.
I can't wait to check it out, man.
Everything. It has worksheets, resource guides. Yeah, I'm proud of it. It's all 35 years of my experience boiled into a course. I teach the whole thing from start to finish. And I think you guys, if you watch my show, yeah, I'm pretty transparent.
Can't Can't wait to check that out. That's awesome, man. It really
I'll give you a discount. I'll give you a
I'll
discount.
I'll buy it, man. I don't care.
I'll give you a discount. I'm going to offer a discount for a period of time. I'm going to give a 10% discount. So you guys have to follow along so that you know when this thing launches.
I'll jump in there. That'll be fun. Man. The community and everything is all going to be part of it. It's cool.
Yes. Well, the community is separate, but and the cool thing about it is not just for first-time buyers. If you bought a home before and you want to know what's up today, what's happening right now, it is current. It covers all of the, the commission rulings, how to negotiate with the listing agent if you don't have a buyer's agent. I know a lot of people are like, hey, why would you teach people to not? Look, guys, open your eyes. Open your eyes. It's happening anyway. I want people to know. I always recommend that they have a buyer's agent, a good one. I'm not saying don't use one, but if you're not going to find a good one, you probably would be better off without one. Yeah. And I'm going to teach you how to do it. Well, I am. It's already recorded. I'm teaching you how to do it.
It's awesome, man. Good stuff.
Yeah. So anyway, if we have any comments or whatever, questions, anything you want to pull up, Joe? What a great 3 o'clock live show.
It's nice to be live again, man. It's nice to be live again.
Don't get used to it, man. I tell you, don't get used to it. I don't know. I did it for 4 years. I did a Tuesday night live every freaking Tuesday night. I loved it, but man, was it burnout.
I think people miss it, though.
I miss it, but getting home at midnight and after closing down and cleaning up and then getting off of my energy drink, I had to drink like 2 or 3 of these. You start work early in the morning, you have to work all day, and then you do a podcast that goes to 11 after 11 at night sometimes. We had some wild shows. But anyway, brother, I love you. I like to push back on you, man.
Listen, I'm coming up there, man. I'm coming up there.
I like the challenge. You threatened me with that before, and you blew me off.
Well, I was handling the stuff, this whole deal with this bar and all this stuff. I was handling all that, and now we got it done. So I've got to get a signed liquor control board. So I'm going to be up there. This time I'm going to come see you. Man.
Well, you better bring, if you're buying bars, you better bring a nice bottle of Blanton's or something, bourbon. I'll have the cigars.
Once I get it done, man, come up. We'll have a cigar. Come to the bar. Come in, hang out. We'll do.
Wait a minute. I'm talking about you coming here.
Oh no, I'm going to come there for sure. But I'm saying once I got this thing all situated, we could have a nice little. It's right downtown in the area. It's great, man.
In Philly?
It's in Easton, Pennsylvania.
Oh, okay. I don't even know where that.
It's Lafayette College, Lehigh Valley. It's 45 minutes north of Philly, right along the river. It's like literally right above Easton. It's where Crayola, the people who make the crowns and the silly putty. That's where they are. Crayola.
Are they still there, or they make those somewhere else?
No, they're there. Larry Holmes, the boxer, he's from there. He went to school with my dad. The world champ.
Yeah. You're acting like I don't know who Larry Holmes is.
Well, I'm just saying that's Easton. I'm trying to tell you what it is.
Oh man, well, tell me when. Look, I don't know. I tell you, I have a friend of mine. We're trying to get our Florida trip going here. We have so many speakers in Florida. Oh, by the way, how many do we have in Florida? At least a half a dozen. Martin Armstrong. Anybody ever heard of Martin Armstrong? You ever heard of Martin Armstrong?
Martin Armstrong, no.
No Larry Holmes or
Armstrong, Neil Armstrong is the astronaut, right?
No, not Neil Armstrong. Martin Armstrong.
Who is
he is look him up. I don't know how to describe him. He's a lot, is what he is. Yeah, you'll have to look him up. But I podcasted with him. It was like a 2-hour podcast. We have that coming up too, and not this week coming, but the next week. It was a pretty amazing show. Joe's pulling it up here. There he is. This guy's a character, man.
You had a cool podcast with a guy from Philly. He didn't like Philly. The analyst, or he was an investor. It was on a Saturday.
Wait a minute. Who is that? Who is that? Who was that, Joe?
He was like an analyst or something. It was a pretty good interview.
That's Peter.
Yeah, that was a good one, man.
Yeah, that was 2 Saturdays ago. That video bombed, and it was probably one of our best videos.
I like that video.
I mean,
man. The whole story about how he went over to Asia and turned off and came back and everything was bust. That
guy is smart. I think he was suppressed.
That says a lot.
He was definitely. I think that video was 100% suppressed.
I enjoyed that. I enjoyed that video a lot. I was really
Joe.
really
Can you pull that up? That video. Everybody should check it out. It's really
really good video, man. I mean, just great information. Good comeback story. He's like Rocky, but he doesn't like Philly.
he was a teacher. He was a professor, and taught Austrian economics, and it was like I said, it was amazing.
Right? He made like a ton of money on Bitcoin and just turned it off and went.
Joe, it was 2 Saturdays ago. Joe's struggling over there. Who is this guy? Oh man,
that was a good
now. I am. Hopefully, we have a big schedule, a big travel schedule that's coming up. We're going to try and go back to Puerto Rico, go to Florida, go back to Dallas. That was it.
Nice, man. Nice.
There it is. Peter.
Yep,
St.
Great
Ange.
video. Yeah, you guys check it out. If you guys get a chance, it's a great video.
That was amazing.
Wow.
Yeah, it's one of our, I'm really disappointed in the viewership. One of the ways that you guys can help us if you like the video is share it with your friends, because a lot of times it just doesn't get seen. And I have a lot of subscribers, they reach out and they're like, hey, I saw this video and we didn't get alerted. We're subscribers and we didn't get the alert that we posted. Well, you can figure out why, but watch it. It's an amazing video. You can just look at the headline of it and probably see why it didn't get.
That's probably why.
Why it didn't get a lot of views. Oops.
That's a good reason there.
Oops.
Come on, Joe. What are you doing?
Oh man.
That's fine.
Well,
good stuff.
All right, buddy. Yep, it is good stuff. Phil, thanks so much, man. I appreciate it. And guys, we have a lot of Phil's information is in the show notes as well. And we've got a lot of great videos with Phil. And I like the controversy that you guys post up saying that the Florida housing market's not crashing. That's kind of funny. But I love you guys. Thanks so much for following along. And again, one of the biggest compliments you can do for us here at Sachs Realty is share our videos with your family and friends. Get the word out there. We have an amazing online community, and we'll see you next time. Sachs Realty, Maryland broker number 607720, office number 443-31845.